Hi everyone and welcome back to my morning report. Charles Posers on Monday the 22nd of February with me, Rich Perry, market analyst at Handset Markets. Let's look at Eurodollar now, and we're seeing this Eurodollar just sliding away ever more. We saw actually a pretty positive candle on Friday, and I was sort of beginning to write my morning report this morning. I was thinking maybe this the support was going to be holding really, and it just looks to be coming under pressure once again. I mean, already this morning we've seen another lower low. What's that? That's 1, 2, 3, 4, 5, 6, 7 days in a row where we've seen lower lows on the euro. You would argue that the selling pressure has, well, certainly until this morning anyway, that the selling pressure was beginning to slow down. But this morning again we've seen them moving to the downside. We're down currently at 65 ticks. The momentum indicator is certainly reflective of this sort of continued downside slide in the euro. RSI back to 50, stochastics sort of continue to decline. MACD lines also crossing over. So this pivot band of 1050 to 11 figure is under big pressure now. This is my medium-term support, and it looks like we're certainly giving this a right old going over. Whether it holds or not, I don't know. Already it's 1050. Sorry, excuse me, 1053 as your key low today. Now, if you break below 1050, to be honest, I think that sort of negates the positive outlook, certainly near to medium term anyway. And it sort of reopens the sort of these reaction highs that you got around this sort of breakout range, which was $1.990 from those December highs. And you're sort of back towards those levels. I think if you see that break below 1050 today, and it hasn't been broken yet, and I'm sort of hanging. These bulls are hanging on by the absolute tips of their fingers, I think, to this bullish outlook. But you'd turn certainly more neutral, I think, on euro if that level were to be broken, and probably sort of pulled back into this band, between $1.810 and 1990. So I think that would probably be what you'd be seeing if you lost 1050 as your support. I mean, the hourly chart certainly shows sort of consistent lower highs, lower lows. Again, you've sort of fallen sharply away. You've got a negative configuration on the hourly RSI, sort of failing around the 60 level, coming back consistently towards 30. MACD lines rolling over, so you're failing on that. Near term, I'd say you'd probably be selling rallies, wouldn't you? Back towards 111, because until you really get a move back above that key reaction high that we saw 1137 on Friday, I don't really see how you can be near-term positive on this. I mean, I was sort of playing more of a consolidation phase, consolidation trade, all the way up until Friday. But now I think you're sort of looking far more negative, because not only are you sort of pulling on these key lows, $1.1050, sort of consistently trading lower. Those moving averages, which had been sort of flattening off, are now sort of turning lower again. That's negative. You're a little bit overstretched near term on the RSI, so perhaps you'd be looking to use a little interim bounce as a chance to sell. Maybe with the RSI back towards 50, that would be ideal. But again, you'd probably see that the price would be back around maybe 111. 111.15 maybe, if that were to be the case. So unless you saw a rally above 11.37, I don't really see how you can be more positive on the euro now. So I'm sort of beginning to turn a bit more neutral / negative on this. So I wish you good luck in your trading on euro today, and I'll speak to you later. Thank you.